Good morning. It's 5 a.m. in New York City. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A global stock sell-off. U.S. futures rebounding from the lows, but the S&P 500 still at risk at posting its longest losing streak since August. That as crypto fears linger, Bitcoin retracing some declines, but after dipping below $90,000 for the first time in 7 months. And President Trump is set to meet with Saudi Crown Prince Mohammed bin Salman later today. MBS wants F-35s. Take a look at what's going on here in markets. As I said, we're looking at futures off of their session lows, still down across the board. But this as European indexes dropped more than 1%, and we saw a drop of more than 3% on the Nikkei in Japan. So S&P futures and NASDAQ futures both down a little bit less than 0.2%. Let's take a look at what's going on in treasuries this morning. Investors buying government debt, and that pushes the 2-year yield down below 3.57, the 10-year yield back down to 4.10, and the 30-year at 4.71.70. In terms of Bitcoin, crypto is something everyone's watching right now because of the risk reversal that we saw. Trading currently at 91,315, but it has fallen below 90,000, as I said, and at one point getting down to 89. For some of the individual stocks to watch, let's get over to London. Valerie Titel is standing by. Valerie?
Good morning, Matt. Let's start with some good news in the tech sector. We are seeing shares of Apple outperform the NASDAQ futures so far this morning, up 0.4%. And this is on the back of some positive news about iPhone sales in China. This coming from Counterpoint Research, showing that Apple in the month of October notched a 40% increase in iPhone sales, making it giving it a 25% market share when it comes to smartphones in China. That is a statistic that Apple has not seen since 2022. So Apple shares up, but just slightly on the back of that positive news. Moving on to M&A, this time in the paint sector. AkzoNobel, this is the Dutch paint conglomerate, has agreed to acquire Axalta Coating Systems, which is listed here in the U.S. This American paint company, a smaller rival. The shares are up some 10% after this all-cash deal. Now, AkzoNobel will be moving its primary listing from Europe to the New York Stock Exchange after this acquisition. Lastly, let's talk about an activist investor. Elliott Management is said to take a large stake in the gold miner Barrick Mining. This is according to the FT, that Elliott has been encouraged about possibly separating Barrick Mining up into 2 different companies. We're seeing this gold miner rise near 2.5% so far in pre-market trade. Now, this comes off the back of obviously the outperformance of gold this year, which has seen a steady outperformance even above the yellow metal for the likes of the gold miners and the gold mining sector. Matt?
All right, Valerie, thanks very much. Now, coming up this hour, we'll be live from the Bloomberg Africa Business Summit in Johannesburg with Masai Ujiri of Giants of Africa, and we speak to Sitara Sundar a little bit later on of JPMorgan Private Bank on this market sell-off, especially when we're looking at issues for some of the alts as Blue Owl hits a low. Stock futures are off their lows, but let's take a closer look at this market sell-off with Morwenna Kaniam, co-editor of Bloomberg Markets Today blog. So, Morwenna, what tripped us off yesterday? You know, 24 hours ago, futures were higher. Then we started to move lower. We got a small debt sale from Amazon, but it's a gigantic company. So what's the problem?
Well, I think really what we're seeing is a lot of that sort of frothy enthusiasm for AI that had been, I suppose, sustaining the rally, especially in the absence of all of that US data that we were waiting for so long. You know, that is now coming off, essentially. You know, the lockdown is over, and therefore we are seeing some of that data coming through. We're highly anticipating the labor report tomorrow. And we're also expecting earnings from NVIDIA this week as well. And I think there's just a lot of uncertainty there as to whether this can really be sustained. And once things start to slip, we're starting to see some of those other factors which have perhaps been underlying the market all year, like tariffs. You know, we're actually seeing a lot of the levels, you know, the biggest drop in Japan since April, as well as, you know, the S&P 500 closing below its 50-day moving average yesterday for the first time since April. So I think what we're really seeing is a bit of that shift back, and some of those underlying factors really coming into play again.
Yeah, it's pretty amazing to see a bigger than 3% drop on the Nikkei. The ASX 200 down more than 3 standard deviations away from its 30-day Z-score, whatever that means. Morwenna, this has been pretty violent in Asia, much worse than in Europe. What's the Sell Japan story?
Yeah, so there's obviously a little bit more going on there as well, because there's some concern over a diplomatic spat between Tokyo and Beijing, and concerns about Japan's economy, where the spending plans are actually going to make it really difficult going forward. But there is also that AI story there too. We have seen the topics falling, and so it's a global story as well as a domestic one there. And I think essentially that's what's similar to what's happening in the US. You've got domestic economic concerns, concerns about what central banks are going to have to do, as well as this global AI story that's sort of playing out and shifting.
All right, Morwenna, thanks so much for joining us. Bloomberg's Morwenna Kaniam there talking to us about the global stock sell-off. Meanwhile, over in Washington, D.C., President Trump prepares for Saudi Crown Prince Mohammed bin Salman to visit the White House.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia? And also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning on doing that. Yeah.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
Joining us now from Dubai is Bloomberg's Stuart Livingston Wallace, who covers the Middle East for us. So, Stuart, how close is this to being a done deal? Because I'm sure that others in the region might have some concerns about Saudi Arabia with F-35s.
Yeah, good morning, Matt. So, the short answer to that is it's likely to be years away, if indeed it ever happens. And so the precedent I'm thinking about for that is that Trump, at the end of his first term, agreed to sell a bunch of F-35s to the UAE. 5 years later, we're still waiting for that to be done. Now, it's a normal process that it's going to take several years of back and forth in any case. There's going to be some chief concerns here. Number one, is that technology in those stealth fighter jets safe? In other words, is there a possibility that it will leak out to nations that the US may not consider particularly friendly? Number two, what does it mean for the balance of power in the region? So one key part here is Israel's stance on this, and broadly speaking, it's not going to be hugely in favor because it needs that military advantage over its neighboring countries. So there's a lot to be worked out here, but I think particularly for the Crown Prince arriving in Washington this morning, it's a huge positive.
I wonder, we heard Donald Trump there triple down on the fact that we completely obliterated Iran's nuclear capabilities. Is that universally accepted?
No, I don't think so. I think there is universal acceptance that it certainly set things back. I don't think there's any doubt about that. And it's not just what the US did. It's also basically this 12-day war, effectively, where Israel was repeatedly bombing Iran. And it goes much further than the nuclear capability. It goes into the air defenses. It goes into a whole series of things that has no doubt constrained Iran. And I think you've seen that over the last several months. But going forward, the serious question here is what exactly, or where exactly, is the stockpile of enriched uranium, and what are Iran's intentions going forward?
Is it safe to say that we've moved on, or at least the Trump administration has moved on from the murder and dismemberment of Jamal Khashoggi that the CIA says was ordered by MBS?
I think so. And you saw the beginnings of that with that famous scene where you had the fist bump between Joe Biden and MBS. And there are a few factors to consider here. Saudi Arabia is one of the world's biggest energy suppliers, if not the biggest. And US presidents, if nothing else, care a great deal about energy prices. So that's one aspect. Number two, there is an overarching strategic purpose here about the balance of power in the region and creating an alliance between the Arab states and Israel, that is a normalization of the diplomatic ties, to act in some part as a counterweight to Iran going forward so that the US doesn't have to expend quite as much time and quite as many resources in the region.
All right, Stuart, great talking to you. this morning. Thanks so much for joining us here in New York. For us early, not so much for you. Bloomberg Stewart, Livingston Wallace there on the Washington Saudi summit. Now on to the other top stories trending on the terminal this morning. Initial jobless claims totaled 232,000 in the week ended October 18th. That's according to the U.S. Labor Department, showing historical data for claims. Weekly data for initial claims for the previous 3 weeks weren't made available. The BLS has also announced it will release the September jobs report on Thursday, November 20th, after being delayed by the government shutdown. Blue Owl shares have fallen to their lowest level since December of 2023. This comes after it restricted investors from redeeming capital in one of its oldest private credit funds. The firm announced earlier this month that it would merge its non-traded business development company, BDC, with its publicly listed vehicle, and investors in the BDC won't be able to redeem their capital until that merger closes. And Japan is working to ease tensions with China after Prime Minister Sanae Takaichi's comments on Taiwan sparked a backlash from Beijing. Tokyo on Monday dispatched a top diplomat to Beijing to try and calm concerns. China's foreign ministry said it had no information on that visit. Takaichi this month became the first sitting Japanese leader in decades to publicly link a Taiwan Strait crisis with the possible deployment of Japanese troops. Coming up, we speak with Giants of Africa co-founder Masai Ujiri at the Bloomberg Africa Business Summit in Johannesburg. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Let's head over to Johannesburg now, where the Bloomberg Africa Business Summit is underway ahead of the G20 leaders meeting. Bloomberg's chief Africa correspondent, Jennifer Zabasajja, standing by for an exclusive conversation with Masai Ujiri, sports executive and co-founder of Giants of Africa. Jennifer?
Yeah, thanks so much, Matt. I am standing by with Masai Ujiri. Masai, thanks so much for being here at the summit. Listen, you've done so much on the continent as far as not just sports, but the sports ecosystem and the infrastructure build. Can you speak to where we're at right now and some of that progress?
We started with a template in Kigali and building a sports city out, and luckily we have a great partner with President Kagame and RDB there and building up. But you start with the arena, you start with the stadium and the whole ecosystem around it. And Zaria Group came in to build Zaria Court, which consists of restaurants, the hotel, right, all that fans and people embody in to go actually watch sports and build on culture and entertainment, so concerts and all that stuff. And this is a huge sports city that we have to actually kind of replicate in other cities to create a tour and the ecosystem of sports. So great beginning for us. Well,
and we should mention you're the former president of the Toronto Raptors in the U.S., of course. What about some of the models that we see in the U.S. with some of the NBA teams and the ecosystem you think can be applicable on the continent? Or is it different the way you're trying to build these out?
It's actually we're trying to replicate that ecosystem. So if you think about these cities, New York, Toronto, Los Angeles, Chicago, they all have arenas and they have that ecosystem built around them. So my Scotiabank Arena, or where we played with the Raptors, everything around that, hotels, restaurants, the fans come in, there's sports bars, all those things equate and work together in these districts. And then we have our cities in Africa. You think about Nairobi, you think about Joburg here, you think about Lagos, you think of Abidjan, Accra, no arenas. No arenas. Imagine those put in the middle of the city, somewhere in the cities, with all the hubs, the districts around them, and all the things that fans, people want to engage in these kind of places. And that's what we're trying to really replicate here with the population, the consumer class, growing economies. There's no way we should not be taking sports, entertainment, and culture and creatives a little bit more We should really be paying attention to it on the continent.
What's the convincing factor, though, for investors, especially when you talk about investing into these ecosystems on the continent? Do you still have to do a bit of convincing, or do they see maybe the ROI long term?
I think the talent is the most important thing when you look at the continent, the youth. Yeah, so I think what's the median age? 20 years old, the median age on the continent. So it's really growing. People are looking at these things. But when you actually think about the talent of athletes, soccer players, football players, basketball players, all of that, then you go to artists, then you go to chefs, you go to commercials, you go to all those things, creatives, comedians, they all perform in these arenas, right? And this brings big time business. And that's going to create a lot of these economies, right? We have so many artists and they cannot actually play in their own countries. We can't develop tours. So imagine Tyler or David or Burna Boy or all these guys going on a tour from Joburg to Cape Town to Nairobi to Kigali to Lagos. We don't have that route because we don't have facilities, like to occupy this. And this is what we're trying to build. That's what builds this entertainment business and sports. So the NBA plays in all these arenas. The PFL, all these guys, UFC, they all perform in these arenas. We have to have them to attract these kind of people on the continent.
What's the role of some of these international leagues? Because you do a lot of work for Giants of Africa across the continent. Of course, we know the BAL, Basketball Africa League is here, NBA plays here.
Yes.
Do you see some of the players in the U.S. and elsewhere potentially playing a role in growing out the sports ecosystem on the continent?
Yes, and that's what I talk about with the talent. We do have the young talent, so you can actually build these leagues from bottom up and then from up down too. Meaning young players in academies can actually grow to play for club sides, which the NBA is doing an incredible job. They've invested in having a league in Africa. There's nothing like that. We should be incredibly lucky to have that. This is the first time they're actually going into Europe now, but we are kind of the guinea pigs of what they want to do outside of the United States. We're incredibly lucky to have that, for them to invest. There will be 12 cities or so that they will have these leagues. You can have young players come from these clubs. You can have star players come to play here. You can have players that retired from the NBA or players that want to play on the continent, want to play in their countries. You grow a league that pays, that has venues. Yeah. It's going to be incredible.
And a quick yes or no, are you going back to the NBA in any shape or form?
We'll see a year from now.
Okay. Masai Ujiri, thank you so much for joining us, co-founder of Giants of Africa and also former Toronto Raptors president. Thanks, Masai, for joining us. Matt?
Jennifer, thanks very much. Jennifer Zabasajja there, Chief Africa Correspondent. Coming up, Google's boss warns on the impact of an AI bubble bursting. That and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. U.S. Ambassador to Nato Matthew Whitaker calls on the EU to take a more aggressive stance opposing Moscow in the war with Ukraine. He spoke in an exclusive interview with Bloomberg's Oliver Crook.
Obviously, seizing the Russian assets are a significant step. It would not only fund Ukraine for several years, both economically and militarily, but I think it would also point to a new step, a more aggressive Europe. One of the criticisms that Europe often hears is that they're just not aggressive enough. And I think what I communicate all the time with, in allied capitals, that we're strongest when we all move together, not just the United States, because I think for so long in the history of the NATO alliance, folks have looked for the United States to move and to do things because, again, we're the biggest economy, biggest military, and what we do matters. But when we can all move together, as all 32 allies within NATO. I think that is always stronger. And it's the same thing when it comes to military capabilities.
There's sort of a paradox here for the European side. Do you think that Europe is too afraid or not afraid enough of Russia? Because you speak to the one hand not having been sort of negligent on the spending long term, and yet on the other, there's a real fear of escalating things. They say no for a very long time. They eventually get to yes, and in the meantime, a year and a half has been lost.
Yeah, one of the conversations I've heard several times from our allies is that what was impossible in February is considered in June and is ultimately like, why didn't we do it sooner in September? I mean, and that's kind of been the history of all of these moves by
Same
Europe.
with the Russian assets.
Yeah, and I think the time for them to act boldly is now.
And that was U.S. Ambassador to NATO Matthew Whitaker speaking with our own Oliver Crook. Now time for your front page news on the Washington Post. Larry Summers is stepping back from public commitments over the Jeffrey Epstein emails. The former U.S. Treasury Secretary said he is deeply ashamed of his years-long communication with Jeffrey Epstein. After Summers' statement, a growing number of boards and think tanks said they no longer had relationships with him. Summers is a paid contributor to Bloomberg Television. On Bloomberg, a federal judge rejected the Trump administration's request to strike down a New York law prohibiting immigration agents from making arrests at or near state courthouses. The judge also dismissed the administration's move to force state law enforcement agencies to share information with federal agents in their pursuit of undocumented immigrants. And on the BBC, Google CEO Sundar Pichai warns no company is going to be immune if the AI bubble bursts. More on that when we come back. This is Bloomberg. It is 5:30 a.m. in New York City. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A global stock sell-off. Futures here in the U.S. rebounding from lows, but the S&P 500 still at risk of posting its longest losing streak since August. That as crypto fears linger. Bitcoin is retracing declines, but it earlier dipped below $90,000 for the first time in 7 months. And President Trump is set to meet with Saudi Prince Mohammed bin Salman later today, and he is looking forward to selling him F-35 fighter jets. Let's take a look at what's going on in terms of futures right now. Off our session lows, but still in the red, with S&P futures as well as NASDAQ futures down 0.33%, continuing the sell-off we had yesterday. Drops in Europe were more than 1%, drops in Japan more than 3% on the Nikkei. Here you can see investors are buying Treasury debt, the U.S. 2-year yield at 3.57, the 10-year back to 4.10, and the 30-year yield at 4.71. For some of the stocks, Bitcoin. I almost forgot Bitcoin. By the way, this drop is interesting in that it coincides with the sell-off in stocks, and it's down from $125,000, but still, to me, someone who's covered Bitcoin for over a decade, it is still shocking that people will pay $91,000 for this line of code. All right, let's get to the stocks now. Valerie Teitel is standing by in London. Valerie, what are you seeing?
Good morning, Matt. Let's start with some good news, and that is Apple is outperforming the broader market this morning, but just slightly up by 0.4%. This is on the back of some research from Counterpoint that Apple has reached a 25% market share when it comes to the smartphone market in China. That is a statistic that Apple has not seen since 2022. This good news on their iPhone sales in China, boosting the shares higher this morning, but maybe perhaps a lot of that excitement had already been priced in, with Apple just muted, up 0.5%. Let's move on to some M&A activity. This in the paint sector. Akzo Nobel, that's the owner of Dulux Paint, has agreed to acquire Axalta Coating Systems. This is a American rival, a smaller American rival, for a deal worth around $9 billion. We're seeing Axalta shares up over 8% after this deal. Very interesting to see that Akzo Nobel, a Dutch company, will be moving their primary listing to the New York Stock Exchange after this acquisition. Lastly, let's end with news about Elliott Capital Management. They are taking a stake in the gold miner Barrick. The FT quoting this, saying that they have around a $700 million stake in Barrick. We're seeing shares of Barrick mining up 2.5%, with the FT saying that Elliott is encouraged about potentially breaking up this miner into two separate parts. And this comes amid a broad rally this year in gold that has seen gold miners outperform. Matt?
Yeah, gold still trading over $4,000 a troy ounce. Valerie, thanks very much. Valerie Teitel there with a look at some of your stock movers out of London in the pre-market. Stock futures are off session lows, as I pointed out, but we're still looking at drops after a sell-off in yesterday's cash trade. Let's get more with Bloomberg macro strategist Simon White. And Simon, we see a sell-off in Europe. We saw the Nikkei drop more than 3%. What's going on?
I don't think there's actually any one thing. I was looking at this before it came on. Look, markets have been going up pretty relentlessly, and certainly in the case of the Nikkei, it was very overbought. So you're going to get some risk just coming off the table. We've got a lot of uncertainty as well, so there's a lot of excuses, if you like, to take some risk off the table. So in the US, you've got uncertainty around the rate outlook. We're now down to roughly 40-50% for a cut in December. That came down from 100%. And we also have uncertainty over the data. When we start to get more data coming out after the shutdown has ended. And there's obviously a huge kind of discussion and furor over AI valuations and whether they're justified or not. And obviously when it comes to Japan, you have obviously the diplomatic issues with China that are kind of simmering now. So there's a whole bunch of reasons why, if you looked at markets, they're up a lot, they're overbought, and this is a good time to maybe take some risk off the table.
In Japan, though, it seems to be idiosyncratic issues, specifically China relations, that are driving the Nikkei down to much bigger losses than we see elsewhere.
Yeah, I think so. I mean, look, the Japanese market it's gone up a lot as well, and it's often more volatile. So I think you're going to see bigger swings in the Nikkei anyway. And it was very overbought. You've got this diplomatic spat. Obviously, Japan's now trying to soothe it with China, right? So we'll see if this is something that's more fundamental. But, if you're sitting there, you've made very good returns on your Japanese stocks, international investor or as a domestic investor, and you see this happening, you're like, but you know what? Maybe I'm going to sweep a little bit of risk off the table. So I don't think there's necessarily any reason to kind of throw the baby out with the bathwater quite yet. It's just a natural part of bull markets that you're going to have these moments of concern.
Simon, thanks very much. Bloomberg's Simon White writes for the MLive blog. You can get his work and the work of his team by typing MLIV Go on your Bloomberg terminal. Joining us now is Sitara Sundar, head of alternative investment strategy at JPMorgan Private Bank. Sitara, welcome. Thanks for joining us on set this early. Let me first ask about what's going on in private credit. Since you specialize in alts, and we had these comments from Jeff Gundlach on the Odd Lots podcast yesterday about how he thinks private credit is the new subprime. Today we see Blue Owl gating redemptions on one of its BDCs because of a merger, and as a result, that stock is tanking. Are you concerned?
Yeah, look, it's the number one question that we're honestly getting in the alternative investment space. And I tend to bifurcate it into two things. One, whether or not the growth that we've seen in private credit is going to be indicative or a cause or a signal for systemic risk. And then two, what the outlook for returns are moving forward. And those can be two separate things. On the first part, we have seen meaningful growth within private credit. It's far outgrown other sub-asset classes when you think about the debt spectrum. But private credit is still only 9% of corporate borrowing. And even when you look at indirect exposure to banks lending to private equity and private credit firms are still only 5 to 15% of their lending to non-bank financial institutions. So whether you look at direct exposure or indirect exposure, the linkages are still modest, meaningful, but not detrimental when we think about systemic risk. On the flip side, I do think that we need to remember that private credit is still credit. And the average credit rating within private credit is single B. You are still taking extended credit risk within these markets. So we're not underwriting to 0% default rates. Right. We're actually underwriting to about 2 and 2.5% default rates moving forward. But the biggest question to us is whether or not it's isolated froth and micro cycles, or whether we're going to be moving towards a macro credit stress cycle, and we're just not seeing signs of the macro side. We expect some cracks in credit, but there are actually opportunities that you can lean into within that through opportunistic and distressed managers. So still like private credit, we expect yields to normalize as base rates come down and defaults tick up a bit, but you're still looking at anywhere from 150 basis point to 200 basis point premium over what you're getting in public markets. So the risk is justified.
Understandable that, you know, sometimes companies go bankrupt. There are idiosyncratic issues. It doesn't look like, I guess from your perspective, a widespread credit problem. But the issue I would have as an investor is the marks, right? BlackRock still marking Renovo at 100 cents on the dollar weeks before it went bankrupt, even though BlackRock knew about the restructuring in April. Doesn't that merit a markdown?
Look, I think that in general, when we're trying to think about the private credit space and private markets in general, the issue and the question about marks and transparency is always something that is going to come up. And in this way, that's why we think that manager selection and who you're investing with is extremely important as we start to see a continuation of capital flood into the space. And some of that is warranted given the opportunities that we're seeing. A lot of the conversations that we have with our clients is to ensure that you're investing with the right manager, that has the multiple decades of underwriting expertise, and in an environment and in an asset class where manager dispersion has historically been pretty tight, we actually expect that to widen moving forward.
What do you think about, let's move on to the AI bubble, because I thought it was interesting that Sundar Pichai even really addressed this with the BBC, saying that if there were a bubble burst, it would affect everybody. I guess that's not a surprise, but we're starting to hear more and more concerns about an AI bubble. Michael Burry, famous investors like Michael Burry shorting NVIDIA and Palantir, Peter Thiel selling all of his NVIDIA stake, as did SoftBank. Are you worried at all?
Yeah, look, we actually just released our 2026 outlook, and this was about 33% of the piece was addressing this question about whether or not AI is within a bubble. I think the way that we think about it is, are there signs of isolated froth building? Yes, given where we are in the AI cycle, we're about a few years in. AI has delivered a lot of returns for investors, especially within the semiconductor and hyperscaler space. Can that continue moving forward? At this point in time, we're not yet seeing signs of a bubble. Usually the way that you think about it is, are we seeing signs of excess leverage? No, there are some players that we're expecting to see more debt financing when you think about CapEx expenditures, but no signs of excess leverage yet. And the other big sign that we tend to think about is where valuations are and whether or not the fundamentals justify where valuations are at this point in time. And what we've actually seen, and this honestly surprised me, but over the past couple of years, since the launch of ChatGPT, we've actually seen valuations for the large hyperscalers and the big semiconductor players derate and come lower because the earnings growth has multiplied by 2x over that same period of time. So valuations have actually come in because the fundamentals have proven out. And then finally, the biggest question is capacity and whether or not we're in an risk of overbuild, similar to what we saw in the 90s with overbuilding of fiber optic cables, and we're just not seeing that yet. Data center vacancy rates are at multi-year lows, and when we're even thinking
of course.
But when it's the right question and the right level of skepticism, which I expect from you. But the other thing is that 75% of data centers are pre-leased.
Right.
And it's very different than what we saw in the late 90s and early 2000s, where less than 1% of fiber optic cables were being utilized, and we're still in a compute-constrained and capacity-constrained economy right now.
By the way, I'm not skeptical of everything, or rather, I'm skeptical of a theory I heard today that Alphabet's debt sale kicked off yesterday's sell-off. Like, does it really matter if a $3.5 trillion company borrows $15 billion? That's a pittance.
I think that we need to expect, we've been in a period of time where a lot of the capital expenditures were financed through excess cash flows. We're now entering a period of time, given the amount of CapEx that's needed to fuel artificial intelligence penetration and expansion, that we're expecting to see debt financing. It's a normal part of how investment cycles tend to play out. You use your balance sheet if you have the strength of the balance sheet, and then leveraging debt markets, whether it's public or private, is a natural part of the cycle.
Sitara, never enough time with you. Hopefully you come back and join us on my show at some point. Again, at the 9 o'clock hour. Sitara Sundar there of JPMorgan Private Bank. Let's get to the other top stories trending on the terminal this morning. Another warning on valuations in the AI industry coming from JPMorgan Vice Chairman Daniel Pinto, joining a chorus of Wall Street executives worried about a bubble. He spoke at the Bloomberg Africa Business Summit in Johannesburg.
It's possible there is probably a correction there. And that correction will also create a correction in the rest of the segments in the S&P and in the industry, because you are probably, in order to justify these valuations, you are considering a level of productivity that it will happen, but it may not happen as fast as the market is pricing.
Blue Owl shares have fallen to their lowest level since December of 2023. This comes after it restricted investors from redeeming capital in one of its oldest private credit funds. The firm announced earlier this month it would merge that BDC with its publicly listed vehicle, and investors in the Business Development Corporation won't be able to redeem their capital until the merger closes. And President Trump argued his administration was making progress on lowering prices as he faces new political headwinds. Speaking at a gathering of McDonald's franchise owners in Washington, he hailed McDonald's extra value meals.
And I want to give a very special thanks to McDonald's for slashing prices for your most popular items, bringing back extra value meals, and I hear you're recommitting to the affordable options of Americans that we really know and love, all of the items that we love. And I hear that McDonald's is playing a very big role in that. We're getting prices down for this country.
Coming up, President Trump gears up for a visit from the Saudi Crown Prince with a possible sale of fighter jets. More on that next. This is Bloomberg.
Tomorrow you're hosting Saudi Arabia. Are you planning to sell F-35s to Saudi Arabia? I mean, and also, are you looking at doing a similar security agreement like you did with Qatar?
Yeah, no, I am planning on doing that.
You're going to sell the F-35s?
They're a great ally. They've got to like us very much. Look at the Iran situation, what we did in terms of obliterating, we obliterated their nuclear capability. Yeah, I will say that we will be doing that. We'll be selling F-35s.
President Trump preparing for his meeting with Saudi Crown Prince Mohammed bin Salman, expecting to sell him F-35s. Former U.S. Vice President Mike Pence has voiced concern.
I have concerns about the sale of F-35s to Saudi Arabia or any nation that could not assure the United States that technology and the great advancements that we've made with the F-35 don't fall into the hands of nations that are hostile to our interests.
Let's bring in Bloomberg's Owner Ant in Dubai for more. Owner, it looks like the president is determined to push this sale through. What obstacles stand in his way?
Well, this deal or this approval by Trump to sell F-35s to Saudi Arabia is only a small step in what is likely to be a years-long negotiations between the two countries. As we have seen earlier with Mike Pence's comments, it is a factor in the U.S. administration's consideration of such sales, whether or not the technology falls into wrong hands. Then there is another factor that the U.S. will be taking into account, and that's the Israel factor. Under the U.S. law, Israel is guaranteed weapons to maintain its qualitative military edge over Arab nations. Right now, Israel is the only country in the region that has F-35s, and if Saudi Arabia gets these weapons, it will be the second Middle East nation and the only Arab nation that gets these jets. Now, the talks will be difficult, and we can say that just by judging by what happened with the UAE. The United Arab Emirates signed a similar deal, a $23 billion deal with the U.S. during Trump's first term about 6 years ago. But those talks over the purchase of F-35s by the UAE have gone nowhere. They stalled over disagreements over the operability of the jets, as well as a shift in the UAE's consideration of cost and benefit analysis. So yes, it is a major concession by Trump, and it's a big win for MBS. But still, there's a long way between that first approval and Saudi Arabia finally getting F-35 jets down the road.
All right, Owner, thanks very much for joining us. Bloomberg's Owner Ant there in Dubai, talking about what we can expect not only today, but over the next few years, because this could take many, many years of negotiation. Now, Bitcoin bouncing back after plunging below $90,000 during Asia trading, deepening a sell-off that's erased all of its gains for the year. Joining us now is Bloomberg's Anna Idera. Anna, what's driving these moves in crypto? I mean, to what is Bitcoin correlated that it goes on this roller coaster ride?
So in theory, it wasn't supposed to be correlated with other major assets, right? That was part of the attraction, but it seems like it is following sort of the risk-off sentiment. And to the contrary of normal sort of volatility we've seen in crypto, this is certainly not the first time that we've seen a huge drop. There really doesn't seem to be anything particularly tied to crypto. You know, you will remember in other years we had big exchange crashes, we had all sorts of drama, people sort of going to jail, whereas in this environment, we're actually seeing people being pardoned. There's much more acceptance and regulatory acceptance and Wall Street acceptance of crypto. So it's caught everybody sort of by surprise, this big drop in Bitcoin.
You know, the phrase winter is coming echoes in my head, not just because of Game of Thrones, but because I've been following crypto for so long, and you do have these crashes that inevitably rebound into higher highs. Is anyone expecting that sort of scenario right now?
Yes, we're sort of entering a territory where it keeps falling. You know, there was a big flash crash on October 10th that caused a lot of pain, and sentiment has not really totally recovered since. And obviously the biggest thing that happened now was that now for the first time we saw a lot of interest in Bitcoin ETFs, which helped drive the latest rally. And for the first time, because of the crash overnight, we saw the investors that came in on ETFs be underwater. So that's a big sort of sign of how sentiment has shifted and what's ahead perhaps.
Anna, thanks so much for joining us. Anna Idera there covers crypto for us out of London. Coming up, we're going to get you set up for your trading day with President Trump, meeting Mohammed bin Salman, and more earnings to come out, but crucially, not NVIDIA yet. That's tomorrow after the bell. This is Bloomberg Brief. I'm Matt Miller in New York. This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead today. First up, Home Depot reports its earnings before the bell. Then more Fed speak with Barr, Barkin, and Logan throughout the day. And President Trump welcomes Saudi Crown Prince Mohammed bin Salman at the White House. That starts at 11 a.m. Eastern. In terms of what's going on in stocks, Blue Owl has plunged to 2023 low. It's 2023 low after blocking an exit from an early fund. Exalta Coating Systems, Axo Nobel is going to buy that firm in an all-stock deal, and Barrick Mining has been rated a new buy at William O'Neill. Taking a look at what's going on in European stocks, the plunge continues. More than 1% drops on the FTSE, the CAC, and the DAX. And here in the U.S., futures are also trading lower. That's it for the Bloomberg Brief. Bloomberg Surveillance is up next. This is Bloomberg.